Hello, my name is Gary Quinzel. I'm the Vice President of Portfolio Consulting at Wealth Enhancement. Welcome to a new series we're calling the 7 Weekly Market Movers. I'm going to give you some updates and talking points about the market and the economy as of the week of March 17th. Let's go ahead and dive on in. We're going to use the 7 Market Movers framework that we often talk about. That, of course, is economic growth, inflation, interest rates, fiscal monetary policy, as well as global macro risk and investor sentiment. I'll talk a little bit about the economy. We get a lot of economic data throughout the week. The week started off pretty good. We had decent retail sales numbers, a little mix. We had some good industrial production numbers, slightly better housing data. But the real important data that came out this week was, of course, the Fed meeting. So the FOMC met over 2 days, and as everyone expected, the Fed kept rates steady, to no surprise. But the real change was in the language that Fed Chief Powell used in the meeting after the conference after the meeting. And the notable takeaways, he talked about the slowdown in economic growth, and they even threw out some economic projections for softer GDP. And that was a big change from the quote unquote balanced approach, balanced assessment of labor and inflation risks. It's clear that the Fed is thinking about the economy slowing down, which means that rate cuts are certainly now more in scope this year, and we talked about that a little bit in previous weeks. How at one point we were expecting only 1 to 1.5 rate cuts this year. Now the market, the futures market is predicting around 3 to 3.5 cuts, and so the market has actually positively received that. And so if we look at what's happening in the market so far this week through the end of day Thursday. S&P 500 is up. It's up around, call it around 0.45%. Not bad, a little rebound after last week. But if we break it down, what's interesting is that it's not the same stocks that have been driving performance. If you look at the performance of the Mag 7, they're actually down, I think, around minus 2% this week. And so we're seeing negative numbers on the NASDAQ 100, slightly worse numbers from the Russell 1000 growth. We're seeing better numbers on the Russell 2000, the small caps. And the best performance is actually coming out of things like gold and bonds. Bonds have actually done quite well. If we look at the Barclays Bloomberg Broad Index, up around 0.5% so far this week, which is pretty good. And we've seen that as rates have come down. We continue to see the yield on the 10-year come down. I think it's around 4.2% right now. The 2-year yield, which is very policy sensitive, is down around 3.9% right now. And so we're seeing yields come down. That's obviously been a boom for bonds overall. And it's a good time to have a diversified portfolio and not just be solely dedicated on those growth stocks. So it's definitely a positive thing that we're seeing a rebound in the markets. There's obviously a lot of global macro risk out there right now. And that's not going away. I think one of the big takeaways, the things that we know for sure right now, is that uncertainty is here for the foreseeable future. We're going to have a lot of uncertainty around, what the tariff implementation looks like. I think April 2nd is going to be a big date in terms of when those reciprocal tariffs might go into play and how the Trump administration is actually are they going to enforce some of the things that they talked about, that the realization of some of the assessments that were due on April 1st, and whether or not some of those industry-specific tariffs will go into place at that same time as well. And so, unfortunately, we're going to have to go along for the ride here. No one has a clear crystal ball at this point. But the one thing we do know is that volatility is certainly on the rise. We see the VIX is higher than it's been, and it's likely to stay elevated. But it's a good time to own bonds. It's a good time to have a diversified portfolio. International stocks continue to do well, better than U.S. overall. That is our market update for the week of March 17th. I hope you found this useful. Please tune in again for future updates. And if you have any questions, reach out to your financial advisor or investment management. Thank you.